To today's Monday morning mortgage update. My name is Sean Woland, and we are going to jump right in with some good news. I'm going to hop right into what's going on in the markets and show you exactly why I'm in a good mood today and why I wasn't as so much of a good mood last week. So, can Christy, can you see my start the Woland Mortgage Team Monday morning rate update screen?
Yes.
Perfect, perfect. All right. So we're going to jump right in. And well, first off, I'm going to go over a loan that we have that's in the spotlight, kind of explain what this is and why it's unique. So we have a unique program. And if this would actually work properly, there we go, called the Powerhouse 100. So one of the things I like to do on this call is make sure you understand the tools that you have available. This is a conventional loan, zero down. Now, I think it's a really, really good loan because a lot of the zero down products are limited in their rules on who can get them. This one is fantastic. There's no down payment required, obviously, zero down. But loan amounts up to 832,750. Most of the zero down programs out there are FHA based and they're down into the mid 500s. So you're limited on the purchase price. This has no limits. It's the maximum based on conventional loans. So 832,750, and there's no income limits. Almost every first-time homebuyer zero down program has income limits associated with it, and especially the zero down options. I don't think there's any other zero down program on a conventional loan out there that is like ours that doesn't have income limits. It's fantastic. Also, you don't have to be a first-time homebuyer to get this. So very cool. 720 credit score is required, so you do need decent credit. If you have lower credit scores, we do have zero down FHA, but this is the higher loan amount, 832,750, and you can get into this house with only 1% out of pocket. So you do need to have, cover your own closing costs on a program like this. Up to 1%, and then the sellers can cover the rest. So if you want to do a rate buy down and buy this rate down from 6.75 to 6.25, you can do that. So pretty cool program. Keep this in mind as you're talking to consumers. There are zero down conventional loans, and we have it. All right, so let's get into what's really happening with mortgage rates and why this last 2 weeks has had me crying in the blues and wishing rates were better and just not in the best of moods every morning when I woke up because every day rates got worse over the last 2 weeks. And here's the highlight of the one of the actual news articles from this morning. Boom. Mortgage rates surged to 7-month highs. Now, 7 months isn't horrible, but when everyone was expecting rates coming down and we hit 5.99 for one day and then immediately jumped up to 6.4, where we're at now in just 2 weeks, it becomes a little disappointing. It's just frustrating to see. Everyone gets excited, and then you get the carpet pulled out from underneath you. So every day this last 2 weeks has been a little rough, and I'll show you in the charts a little bit later. But the overall average right now, 6.41 on a 30-year fix. Keep in mind, this is the perfect borrower. So if you have less than perfect credit on a conventional loan, you will have a higher rate than what this is reflecting. This is based on 780 credit score, 25% down or more, single family detached home, not condos, not second homes. This is a primary residence, and you're at 6.41. So can you get lower than this? 100%. Absolutely. We can do rate buy downs all day long. This is just a national average for a rate right now that typical lenders are quoting with no points. Now, ARMs a little bit better, FHA a little bit better, and VA a little bit better. So not terrible overall, but not what we had. So Hopefully things will come down, but this is the main reason. Oil. Oil is inflationary. So when the prices skyrocket like they did from where we were early September, we're at $63 a barrel, up to $100 a barrel. Yeah, it's going to cause some problems. Gas prices are higher. The cost of goods is higher because guess what? It takes fuel to ship those goods. And if the fuel's more expensive, then the prices on goods are more expensive, and that yields to higher prices for everything. So inflation is the enemy of mortgage rates. So when we see inflationary pressures, usually we see mortgage rates increase, and that is what has happened over the last 2 weeks. Now, there's been a lot of people speculating that this is a short run. It will be because it's not um, it's based on an incident. It's not based on an overall economic um, climate. So we are going to see lower prices. In fact, this morning, and one of the reasons it's a good morning is because of what Mr. Scott Bessett said, who is our Treasury Secretary. He says oil prices will be coming down. So there's a lot behind that, but the markets liked what he had to say and liked the whole articulation of the data behind it. And what did we see? Well, let's jump into the actual mortgage-backed securities to see where we were on the cliff that we were jumping off of and then where we are now. And boom, here's that blob, the guy jumping. He fell down and then boing, he bounced up, right? So if you look at the mortgage-backed securities back 2 weeks ago, this was the Friday they were at 5.99, and this was the Monday that the war started. Every day we had this Monday was a little bit of a bounce upward because there was hope that one of the ships made it through the Strait of Hormuz, but it was fake news. So we lost it overall again. So we had a pretty rough week. We lost a lot, but then this was Friday. And guess what? This is today. This nice little green candlestick chart bouncing upwards. We hit a floor, we bounced above it, we went through this Fibonacci level. Now we're going up, and we have a lot of room to go. So this is exciting to see. This little bounce is I'm very, very grateful for because literally every day last week was just a rough news every morning when I woke up. So moving forward, but if you look here, we have a nice little floor, but we were pretty steady for a while. Then we went all the way down below this 200-day moving average, and now we're above it. So good news on the mortgage-backed securities. Look at the 10-year. The 10-year screamed higher. And when the 10-year goes up, mortgage rates go up. So every day, except for a couple, it was just a nightmare waking up to. We did bounce down. We've got a little bit more room to go here. So I'm hoping that today we'll continue to get more. Um, and we'll see what the charts are showing. But overall, mortgage rates had a bad couple weeks, but hopefully they're on the rebound. So that's the good thing. A lot of tension with buyers that were shopping, but we have seen a lot more activity. This is our buying season, so hopefully rates will come back down and people will get a little bit more excited and they'll pull the trigger on the home they fall in love with and not wait. So what's next on the horizon for this week? What is going on? This is the calendar. Not much going on this week other than manufacturing and production for the industrial side, manufacturing. On Wednesday, we've got producer price index, PPI. That's an inflationary measure. So that's going to be interesting to see. And then we also have the Fed talk. Now, the Feds are not going to cut rates. They're not going to do it this go round. It's just not in the cards with everything going on. It's not happening. So you'll hear the Fed talk. They're going to keep rates steady. I think globally, this is kind of what's happening. Overall, you'll see the Bank of England, the European, the ECB rate decision in China. They're all going to be bringing out what they think their Fed funds rate is. They're going to be announcing theirs, and they're expected to have no change as well. So what we can listen to is what their talk is for what they think inflation will be. Are they going to be hawkish or dovish? So we're going to really see the tone of the Fed on Wednesday, and that could move the markets, even though they're not going to be doing anything to the Fed funds rate. What they say could move the market. So I'm going to be watching that very carefully. We do have initial jobless claims coming in on Thursday. That's always a movement of the markets. It always moves the markets. Continuing jobless claims, if we can see that rising up, then that could help rates. So that's really what's happening this week. And it's going to be a busy week because this is the buyer season. We are in full buyer mode. We have a lot of pre-quals out right now. We have a lot of people that are really making offers and checking on buy down options and getting creative to get those payments down. So get out there and be busy. Let me know how I can help. And I'll open it up to any questions if you guys have any questions, any customers that you have any questions on, and then we can get to it. Any questions today? All right. This proves that I'm the best teacher on the planet when you explain things and there's no questions. I'm just kidding. But Sean, did you have something?
No, I was just laughing. I was going to say I'm probably going to give you a call a little later about my client. I think she reached out to you
Yes,
about
she did.
what
Yes,
we
she
found
did.
this
So this
weekend.
weekend,
So yeah,
she has
got
a
a few
few things she
questions
wants to
about
look at.
that. And anyway, I'll touch base with you a little later.
You got it, Sean. All right. Well, enjoy your week, everybody. Have a great one. And call me if you need anything. I'm always here.
Sounds good.
Appreciate
Thank you.
you. Thank
Thanks, guys.
you.
All
Have a
right.
great one.
Bye.